Hello and welcome to this weekly market recap for the week ending Friday, December 19th, 2025. I'm Tom Bowley, Chief Market Strategist here at earningsbeats.com. It's a pleasure to be with you. Actually, coming to you right before the close on Friday. So, give you some action as the market gets set to close out the week. Literally just one more full week of 2025 before we get set for another year. We'll see what the market holds for us next year. Of course, we've got a big event coming up, our Market Vision 2026 event, which will be held on Saturday, January 3rd, starting at 10 a.m. We'll be talking a lot more about that here over the next 10 days to 2 weeks. In the meantime, we do have a big event coming up tomorrow, Saturday morning, on December 20th, starting at 10 a.m. Eastern. We're on correction watch here at Earnings Beats. There's just a lot of signals out there telling us to be careful. It's not, it never provides us a guarantee that we're going to see some weakness ahead, but it does tell us that the risks are greater. And so I'm going to be talking a lot about the signals I'm seeing and how it compares to some of the signals that we saw before some other corrections and cyclical bear markets and so forth. So it'll be very, very educational. And I'll talk a little bit more about that later in the show and give you some things you can do to sign up. We'll have a QR code where you can sign up on your mobile device, and I'll show you how to sign up going to our website. But we'll get into all that in just a few minutes. It was an interesting week this week because on the heels of a rate cut last week, we had the jobs report, which was delayed due to the government shutdown. That came out earlier this week, and it did show positive jobs numbers, which was kind of I think somewhat of a positive, especially after the ADP report for November came in negative. So still showing, a little wear and tear on the economy though. But we got really good news on Thursday morning when we had the November CPI report come out. And that showed that there was really no inflation to speak of during the month of November. When you strip out the volatile food and energy prices, the consumer price index came in flat for November, well below the expected increase of 0.3%. And so a lot of folks looking for that annual rate to come in around 3%, 3.1%. It actually came in at 2.7. So much closer to that Fed 2% target than what a lot of folks thought. So the market's rebounded here a little bit. I'm not overly impressed with the move back to the upside, but hey, up is, better than down. Certainly for most folks, we're kind of watching things here. Want to kind of, bide our time, maybe be a little patient, disciplined, see how these signals play out. But long term, I love the market. Short term, and I'm talking about the next couple weeks to a couple months, maybe, where we've got some things we've got to try to figure out. And again, I'll talk about that a little bit in this show, but really I'll be talking about it a lot more tomorrow in that special event where we're going to look at that correction watch that we're on. Anyhow, let's go ahead and take a look at what has happened here over the course of the last week. NASDAQ 100, actually, I'm going to update this since it's not static and it keeps changing. But for the last week right now, NASDAQ 100 up about 0.5%. Transportation up about 0.2%. S&P 500 flat. S&P 400 mid-cap flat. Dow Jones and the Russell 2000 both down a little bit more, down about, closer to 1%. Moving on to the sectors, consumer discretionary over the course of the last week, up 1.18%. Healthcare gaining about 0.6%. Technology just a little bit behind that. Then materials, you can see we had 6 groups to the upside, 6 different sectors gaining ground. We've got 5 to the downside with just a very, very slight move higher in the S&P 500. So looking down at the bottom, you'll see more of the value-oriented stocks. At the top, a little bit more of the growth-oriented. So we've seen some of that rotation back into growth, which is good. We need to see a lot more of it, but you can't see a lot of it until you see some of it. So it's at least a good start, I would say. But given the information and the data that came out this week, I actually think that the data came out and should have supported a huge move up in growth stocks. I mean, when you get the inflation number coming in flat, 0.3% below the expectation, that should have, we should have seen a lot of rotation into the growth, also into the more of the interest rate sensitive stocks. Normally small caps do really well, and that was the worst performing index. So it's still kind of weird how the market is performing given some of the news that came out this week. But let's take a look. I want to show you a couple of things, and I'll be talking about a lot of different signals that have me concerned. But I wanted to look at the sectors. So technology being one of the better or one of the stronger sectors over the last 12, 13 years, really driving the secular bull market to the upside. Technology, you can see we've had a huge run off that April low. And at the most recent high, if you look where the PPO is, we're bouncing off that 20-week EMA, trying to make a push back to the upside. But if the XLK were to break out, it's going to do so with a negative divergence and at a pretty stretched level on the PPO. In other words, this is an area up in here where we tend to see a little bit of weakness develop after we've had this much strength. So you get up to above 5 on the weekly PPO on the XLK and go back literally over the last 5 years, 5, 6, 7. I mean, that's an area where we're stretched and normally require some sort of a reset or at least some type of pullback. And I think that's really what we're going through here. And what we've seen since the end of October is a little bit of selling, maybe this group trying to reset. Are we going to sell some more? That's a great question. Again, I think the risks have increased that we will see some more selling, but whether or not it materializes now, whether it's another few weeks down the road, that part's really hard to tell. Bottoms, when the market's going down, I'm trying to find a bottom. I think bottoms are much, much easier to call. Tops are more of a process. You go through a process, and bottoms tend to be a capitulation, which could just be, after a series of a few trading sessions where we're going down quite a bit, then all of a sudden we just get a total washout to the downside and a big recovery, reversing candle of some sort. That's what we look for on the bottoms. Tops, it seems like you go up, you kind of pull back, then you kind of go up again a little bit, make a breakout, but it's not really a great breakout. And then you pull back and you try it one more time. And while you're doing all this, money is rotating underneath the surface, moving away from risk assets and into more, risk off type assets. And then all of a sudden the market starts dropping. And so it's, again, like this process that we go through. But anyway, technology, I think, is one area got to be a little careful of. We've got discretionary making a nice breakout. Like I said, this is a strong area this week in the market, making a nice breakout, but the breakout's coming with a negative divergence on the weekly chart. So again, not exactly the best situation for the breakout. The XLC, which is communication services, this is the third of our really aggressive sectors. And we're up, trying to get back up above that September high, but doing so with that weekly PPO way, way lower. And if you want to see what happened back at the early part of 2025 when we had a negative divergence, going up, 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 that PPO was rising, pulled back to the 20-day, we went back up, and on that breakout, negative divergence. And then we had the big selling, February, March, and April, if you recall. So here we're moving up. PPO looks great. We're hit the 20-day. Now we're trying to move back up. And if we get that breakout, it's going to come with another negative divergence in play. So it's just showing us that there are still some issues out there that we have to try to work through. Internet stocks. This is one of the biggest areas of communication services. And right now, if you look, this is an area where internet kind of peaks sometimes or really struggles once we get up. This is a stretched area when we get that weekly PPO up around 7, 8. Right now we're at 7.15, and we've just recently broken out with a slight negative divergence. So I think internet stocks we got to be a little careful about. Semiconductors, there is no bigger area in the market than semiconductors. Semiconductors making this push to the upside We got the weekly PPO up near 10, got up to as high as about 9, came down, tested that 20-week moving average, trying to bounce off of it. But look at that PPO falling. So even if we move up, it feels like slowing momentum to the upside. And that's, this I think is one of the biggest issues that the market faces, because the NASDAQ 100 is represented by about like 25% of the NASDAQ 100 is represented by semiconductor stocks, and probably 11 or 12% of the S&P 500 represented by semiconductor stocks. So this is a big area, very, very influential area for our major indices. And so if we have a huge run and it looks like maybe the group is tired and it's an overcrowded kind of, a very crowded kind of trade, any kind of period of consolidation or weakness is really going to be a drag on the S&P 500, especially if we actually see some outright selling. If we were to go back, say, where we broke out from on the Dow Jones US Semiconductor Index, that would be down at 22,000. Right now we're at 27,700. So there would be a lot of potential downside if we were to go test that breakout level, which is possible, because again, if we get back up close to that area of resistance where we were back in October, there's a very good chance we're going to have a negative divergence on that attempted breakout. So again, and this is just one of many signals. Again, I'm going to talk about the signals coming up on Saturday. And if you are new to earningsbeats.com, go over to our website, earningsbeats.com. You can scroll down here. If you click on this link right here that's on the website, you will come up to this page right here, and you can type in your name, email address, submit. That will get you registered for the event. We'll reach out to you and let you know when it's starting tomorrow. But it would be, I think it would behoove you to be in on this, to at least consider some of the areas of the market that are at least suggesting that we could have some issues. And I know this has been a great rally off that April low. And believe me, we called, back at the end of January. That's when we said, hey, going to cash. 3 weeks later, we topped on February 19th, and you saw what happened. We went down 20%. I thought it was going to be a correction, at least 10%. And that's about where we were. And then the beginning of April hit, and literally we saw another very quick 10% drop. So we went down 20%. And it was on April 11th that we told our members, I'm going all in, back in. Like I said, bottoms are much easier to call. Tops, it's like, we're feeling toppy, but it's hard to say this is the candle that marks the top, because we don't have capitulation on the buy side like we do on the sell side. So I would just say be careful, but come on in and check this out. I think you're going to, and register, even if you can't come in tomorrow. If you physically can't make it in on Saturday because you have other plans, that's fine. It'll be recorded. So come in, sign up. We'll make sure you get a copy of the recording. Also, if you're on your mobile device, we do have a QR code where you can just scan that. You can register on your phone. You can come in and watch it on your phone. So make sure you sign up and check this out. Also, please, 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 this really helps us. If you can like our videos, we do a lot for free, trying to help a lot of folks out, trying to learn about the stock market, learn more about technical analysis. Hopefully you find a lot that we talk about very helpful. And so if you can hit that like button, and also subscribe to our channel, that will help us. Leave a comment, whether you agree or disagree with what I'm saying, leave us a comment. All those things help us in the algorithm with YouTube and help us grow. So, and expand our reach. So even if you, for whatever reason, decide not to subscribe to our paying service, if you can just help us with a like, a subscribe, turn those notifications on so that when we do a live event, you'll be notified. That would certainly help us. We'd appreciate that. All right. I wanted to go over the scooter reports, because if you're looking for, I've been sitting mostly in cash, and I have, every once in a while members will write in, are you doing anything? What do you do? I mean, for me, if I wanted to do something, and I'm a short-term trader, if I was a long-term, buy and holder, I would stick with the market. I'm not really worried about the market, moving into a secular bear where we don't see another S&P 500 high for 10 or 12 years. I think we're years away from that. So that doesn't bother me. I believe we're going to all-time highs. It's just between now and then, are we going to have a little bit of an issue where maybe we get a 10% drop? And when I think the risks are elevated, I tend to want to kind of pull back and maybe hit a trade here or there. I haven't been doing anything, but I don't think there's anything wrong with, trying to find trades here or there. I think, we're getting a little bit of a rebound in some of the growth stocks. I think if those have broken down, they're getting up close to 20-day moving averages, you want to be a little careful. But there are other stocks. There are other, we got healthcare, we got real estate, we got discretionary that I pointed out. It's breaking out. So if you find some individual stocks within discretionary, you can trade them. I'm just not committing capital for an extended period of time because I am worried. So my preference is to trade and hold stocks maybe a week, 2-3 weeks, maybe even up to a month or two, and try to get, 10, 15, 20% out of a trade. And then when it gets to a key area, prints a negative divergence, something like that, I take my profits, move on to the sidelines, look for something else. That's the way I like to trade. And especially around earnings gaps. In this market, I just want to be a little bit more careful. So I'm going to wait, try to get stocks right at key support. And sometimes if I can find that in the morning, I might try to jump in and sell by the close. So anyhow, one thing you can do though is over at Stock Charts, you can go into the Scooter Reports. Let me show you how you get there first. So here on your dashboard, you just go over under Member Tools and go down to right here, Research Tools, and you'll see Scooter Reports, Stock Charts Technical Rank. That's what Scooter stands for. It's an acronym. So Stock Charts Technical Rank is a ranking system by Stock Charts developed by John Murphy that ranks within each asset class. So all large cap stocks are ranked from 99.9, that's the highest ranking, down to 0.1. So if I click on this, it'll bring up the lowest ranked stocks, or 0.0. So you can kind of see Strategy Inc., formerly MicroStrategy. That's one of the worst stocks out there. Fiserv, Cracker Barrel, Trade Desk, Charter Communications, and so forth. Now, if you want to find the best, you flip it and you look at the 99. So these are some of the stocks that have been doing extremely well. If you look back now, the one limitation with the Scooter score is it only goes back and looks at action from the last 5 months. Everything in the formula is from within the last 5 months. So you could get a stock literally that's been going up for 5 months, but was going down for 10 years prior to that. So maybe it's just bouncing before it goes back down again. So that's a limitation you got to be aware of. But one thing I like to do is when a stock is starting to jump with its Stock Charts Technical Rank, the Scooter score, it could be an indication that we're transitioning from a stock that maybe is underperforming to one that's outperforming. So you see this change column. So I'll go in on this intraday, change it to 1 week, and then click on the change column. And this will tell me all the stocks that are making the biggest jumps in their Scooter scores this week. So Lululemon, which I've been talking about recently, Scooter score is now 54, but it's jumped 47. So that means it was a 7. It was one of the worst out there. And now all of a sudden it's been moving up. And that was as a result of earnings that came out. They raised guidance. They beat top and bottom line. And Lululemon is now trading a lot better. Well, you've got Affirm Holdings. You've got Infosys Technology, Rivian Automotive, Airbnb jumped 26 this week, now up to a 58 Scooter. So now it's in the top half of large cap stocks, whereas before it was probably in the bottom third. So we're starting to see some more positive action in Airbnb. Amgen, which we've been talking about, Amgen looking good. Starbucks, I mentioned to members in our daily market report yesterday, Starbucks was moving to about a 5-month high. So you can start right here off of this list, and then you can pull these stocks up. So in other words, I'll pull up Starbucks. And here was the breakout. So see all these tops coming across here at 87.50. Starbucks made a breakout yesterday, closing above that level. This could be the start of something more significant. Even if you don't like the stock at that point, what you might do is put it on a watch list. And that's what I think, going through and doing your homework, whether it's following the chart list that we provide. We do a lot of research for our members. We create a lot of lists. Call them watch lists if you want. They're just, chart lists at stock charts. But, there are certain filters that stocks have to meet in order to go on our various chart lists. And then, one could be, you could have a watch list that's just keeping track of stocks that are making big moves in scooter rankings. So you might pull up Starbucks because you see a big jump on the scooter report and then see this, and you might want to just click and add it onto one of your, you can literally just click save. So if you have a watch list and it's, I don't know, weekly scooter scores jumping, whatever, click this and save it. And when you click save, it'll ask you which, the chart name and then which list. So if you have a list here that shows scooter jumps or whatever, you could just come on, click on that chart list, and then literally just add that chart into it. So it's very simple, and it's a great way to, again, kind of follow what's going on. So here's Airbnb. Airbnb all of a sudden was downtrending. Now it's uptrending. How about Affirm Holdings? This is computer services. Affirm. Well, if you annotate this, one of the things that kind of gets my attention when I look at a stock like Affirm is kind of right in here. Looks like I got a little bit of a channel going, right? I mean, there's the highs. If I can drag this right down, look at that. Connects the lows. So it's been channeling down. Well, now all of a sudden it looks like maybe we got an uptrend started with a breakout. Look at the PPO, which was negative. Now it's positive. So again, that's a great starting point to point you to some stocks that might be changing course and starting to move higher after having been a laggard for a while. Anyway, that's essentially, what I've got. Market literally just closed. So I think in closing, why don't we just take a look, see how we finished today? Dow Jones up 183, S&P 500 up 60, NASDAQ up 300 points. That was 1.3%. NASDAQ 100, same thing, 1.3%. Volatility index took a tumble today, down 11% to 15. So market makers not really looking for a lot of volatility ahead. And that's, one thing certainly I'll be kind of focusing in on as we wrap up 2025 and move into 2026. But if you want to see those signals that look like maybe things are a little, I don't know, a little bit weak or weakening, or maybe just a little riskier, come on in on Saturday morning. Again, go over to Earnings Beats and make sure you click on that link. It'll take you to this page. Sign up with your name and email address, and hopefully we will see you tomorrow. Have a great rest of your weekend, everybody. See you Saturday morning. Happy trading.